Hello everybody, it is Wednesday and we're doing my monthly miner review, and there's a lot going on with miners, and miners have been very weak over the last month and we'll try to dig into why. But most importantly, they are by far the hardest things to analyze because there's so many dimensions. There's debt, there's hash rate, there's the age of the miners, there's the efficiency of the miners, there's the overhead, there is a million different things. Anyway, we crunch them all and we have hopefully some good results as well as some very scary results, because as the title here says, dead or alive, some aren't going to make it unless they do something very radical, i.e. borrow more money, issue more stock, etc., etc. We'll also talk about the kiss of death, which is so important as well. So, by the way, if I look a bit bleary-eyed, it's because this has been like literally 8 hours straight, nonstop of number crunching. And that's on top of work done yesterday. It's just this morning. So let's jump in. We'll analyze all the top miners, over 8,000 data points. And anything that comes out of this is not investment advice, it's edutainment, because markets are irrational. They still plow money, like the big money. Big Wall Street firms still plow money into very weak miners as well. All right, we're going to look at these miners today. These are usual suspects. NA is Sphere Digital, Argo, Bitfarms, Bit Digital, Cipher, CleanSpark, Core Scientific with a Q, which means it's bankrupt. Be careful. DigiHost, DMGI, HIVE, HUT, Iris Energy, Marathon, Mawson, RIOT, and WULF. And they are the names. And you can see as well, the market caps all vary. The two biggest market cap ones are RIOT and Marathon. Interesting. What we do is we take every single ratio and dimension, and we create ratios on ratios to level the playing field. So you could be a $9 million market cap miner. You could be far better than a $2 billion market cap miner. So MT, thank you so much. And these videos are an acquired taste, but there is money to be made in miners if you can time it right. Hey, Andy in Australia, good to see you. So over the last month, you can see here, the results are mixed. Bitcoin has done very well, but the miners, many of them, kind of half are up, half are down. I won't go into details. Even ones that, like the one that won a month ago, CleanSpark, is actually down. It's exactly down 1% for the actual month, and is very, very weak today. And again, it's very difficult to understand exactly how markets work, but there could be some things happening behind the scenes. But the one that has won the month is Cipher. And Cipher, last month in my analysis, came second. So that was interesting to see that, at least not all the time, you're right, but picking the winner last month, well, the second place was the winner of the last month. But again, markets are irrational. I want to make sure that point is very clear. Let's look at some Bitcoin metrics before we jump into the miners themselves. This is the IA top and bottom model, and you can see the bull run is well underway. We are in that light green deliciousness, and the chart is going up. In fact, today as we speak, Bitcoin hit, I think, 35,700, maybe a little bit more. It's 35.5 right now. It hit 35,900. Whoa. See, that's how heads down I was on this video that I didn't even look at the price. Anyhow, but the bull run is well underway. So anybody who tells you, oh, we're still in a bear market, or we might be coming out of the bear market, we've been out of it for a long time, like 11 months. So make sure you understand that. Also, let's look at the hash rate. This is what is clobbering the miners, because the hash, which is the security of the network, keeps going up and to the right. Year to date, it's up 49.42%. Again, this is in the Tabby model, and that is high, and that is pressuring miners as well. Not only are more miners occupying the space, they are actually plugging in more rigs, which is driving the hash rate up, which is good for the network, but also makes it very expensive to compete. Now, let's look at another piece of good news. This is the miner net flows, also from the Tabby model. Very important to watch what the miners do. Now, when miner flows are negative, that is below that blue bar in the middle, that means that miners are selling more coins than they are mining. And this is a sign of maybe a decline in Bitcoin price. But right now, it's about to flip positive, which means they are moving to HODL mode, which is very, very bullish for the chain too. We all know long-term holders are growing. Nearly 90% of Bitcoin has not moved in 90 days. And now the miners will not be pushing their coins to the exchanges to sell. This thing is scarce and going to get a lot scarcer. But we'll also talk about why this is so important as well. So let's jump into the engine time. Again, crazy amount of numbers behind. I'm just going to show you the summary of each so you can see all of the key ratios that you may like when it comes to analyzing your miner as well and decide which one you want to weight accordingly. I weigh things in terms of minimizing risk. So if you have a lot of debt, I don't like it. If you've got a lot of stock dilution coming, I don't like it. If you're not efficient, I don't like it. If you're not effective, I don't like it. So let's jump in. And by the way, a quick note from the team here, from William E. Just joined Capitalist membership, best investment out there. We did open a couple of seats. It did sell out, but we opened a few more because the community is wonderful and everybody's helping each other, which is really awesome. So if you're interested, come on in. Now let's talk about some of the arrows you're going to see in these charts. Lower is better, higher is better, because we're looking at a whole bunch of different ratios. So remember that, and I sort them. So you want to see assets that are close to the top of the range. Let's start with the first. I've got a couple of new categories today as well. Always adding more ratios and creating more composite scores to really refine the model. This one is insider sales. And these are the amount of insiders that sold over the last year. Again, just a reminder, Core Scientific is bankrupt. You don't know what's going to happen to your stock, so don't hold it. Never hold a Q, because odds are shareholders could get wiped out. Now, top of the list is RIOT. 13 insiders sold over the last 12 months. Cipher, 4 insiders sold. Any, which is Sphere Digital, 3 did, and Marathon 3 did as well. So this doesn't mean it's the kiss of death. Sometimes it's very low amounts of money, as was the case with Cipher, for example. But sometimes people do need to sell some stock, especially if it's a huge chunk of their compensation. They've got to pay the bills, they've got to pay the mortgages and look after their families and such. So it's not catastrophic, but when you see a lot selling, that can be an issue, especially when they're selling big chunks. And watch carefully. If you see the CFOs selling, always a bad sign. Anywho, let's go. Let's start with some of the ratios. Again, you want these to be as low as possible. This is the price to book ratios. And right now, I used to want 1.5 or less, but because things are getting very competitive in the space, I want it to be 1 or less. So if you are kind of like the average of all of these is about 1.17, you want it to be less than that. So Argo wins, Core is second, Mawson third, Sphere fourth, and Iris Energy is fifth in this particular ratio. You don't want to be at the bottom, but again, it just depends on how you're structured. And what's really complex about analyzing miners is no two are alike. You could have one miner that's amazing all across the board, but gets dinged in one ratio and others, etc. And a lot of this is because they are a moving target and everything changes from week to week, from month to month. The amount of rigs they have, the amount of costs they have, the amount of electricity they're charged, etc. So bear that in mind. A visual of the price to book ratios of 1 or less. You can see here, you've got DMGI, a little green tick mark beside each. Iris Energy, Sphere, Mawson, CleanSpark, Bitfarms, they kind of all make the cut. So, but the ones that don't. So what you could also do is, when you look at this data, is you could use this as the process of elimination. If there's a certain ratio that's very important to you and they don't make the cut, kill them. Because not all miners will survive. And that's why this is called Dead or Alive. It sounds like a Bon Jovi song, which I can sing for you later if you like too. So let's look at the current and future hash rate. This is important too. Marathon has the most hash right now, 19.2 exahash, going to 24.6 within a year. Core 15, staying at 15. They have a lot of debt. RIOT 11.7, going to 20. And CleanSpark 10, going to 20 as well. So we'll see who gets there first, who gets that, coveted third position as we go forward. And you got a lot of new miners as well that are kind of rattling around the bottom. And you have HUT with a lot of growth expected because of their merger with US mining or US Bitcoin. I can't remember what they're called, but that's why that kind of stands out there as well. All right, hash rate growth, important. You can see HUT growing the most because of the merger. I don't know what the combined P&L and balance sheet will look like after the merger, but we shall see. CleanSpark, 106% growth rate, RIOT 73%, and WULF 59%. You wanted your miners to do a lot of investing in rigs, especially modern, efficient rigs, in the bear market. That was the time to either issue a lot of stock and buy a lot of rigs cheap and plug them in and get ready for the bull. But it's important to look at the scale too, because you do want your miners still to scale their hash rate as they go forward, because it's going to become ever more competitive. Let's look at the Miner Production in October 2023. Marathon is top, 1,184 Bitcoin mined, which is a big chunk. Core Scientific 910, CleanSpark 633, RIOT 458. So it's interesting when you look at certain things like the amount of Bitcoin that they mine. So RIOT do 458 versus CleanSpark 633. If you look at the actual hash, RIOT have more hash than CleanSpark. And this is one of the ratios we look at because they're not effective and efficient in how they mine. And for whatever reason is, I'm not sure as well. So that is the production numbers. Also, let's look at liabilities divided by market cap. Absolutely important. We're in a very high interest rate environment. If you're carrying a lot of liabilities in your balance sheet, that's going to smash your ability to be lean and mean in this whole space. So if you look here, you will see the ones at the top are kind of debt-free pretty much. CleanSpark, their liabilities make up 3% of the market cap. DMGI 2%, Cipher 3%, DigiHost 4%, HUT 7%, and that's all okay. My cutoff is at about the 25 to 40% mark. That's where Marathon is. 40% of their market cap is debt, and that is not good. Iris has a lot of debt too, WULF, etc. And then Core Scientific, 3.5 times their market cap is debt. That is another kiss of death. You do not want to be anywhere near those levels. And that's why you can basically take this miner and you can just eliminate it. But as they go through bankruptcy, the people holding that debt, including people like shareholders, can get wiped out. We don't know what the courts will say, so watch that carefully. Also, market cap over exahash, very important to Mawson. I don't know how they do it, but they only have $6,000 of market cap per exahash, which is hugely efficient. My kind of cutoff point is about $65,000 to $70,000 for this ratio. Sphere Digital also does very well. Core Scientific, again, bankrupt. So even though this is because it's driven by market cap, they could have a very small market cap and a lot of hash, but also a ton of debt. And that's important to look at. So you got to look at everything in combination. That's why we create ratios of ratios. So that is the actual market cap. Now the loser down the bottom here is HUT. They have $268,000 worth of market cap or exahash. RIOT, $174,000. Cipher, $145,000. So some of these are kind of expensive, but if they're growing into it fast, it can be forgivable. Let's look at Bitcoin production per month over hash. Here, again, my cutoff is around 0.06. And you can see some of the top names. DigiHost do really well. They are producing 0.087 Bitcoin per hash. Cipher, second place, 0.069. HIVE, 0.068. And this is one of the most important things. This is basically how effective and efficient they are. Iris, 0.066. CleanSpark, 0.063. Bitfarms, 0.063, etc. And this is a key one to look at too as we go forward. Next is the amount that they are hodling. Now, as Bitcoin pumps in price, this can have a substantial impact. In fact, as I'm looking at the markets right now, Bitcoin is nearly 35,600, so it's holding up pretty well. But if you have a big bag of Bitcoin in your balance sheet and Bitcoin goes through the roof, it can be quite substantial. So we do look at this now. Now, HODL is the winner. Basically, nearly half of their market cap is based on their HODL bag of Bitcoin, worth 325 million. And then, again, this is in proportion to the actual market cap. Second place is DMGI, which is almost tied with Marathon. And Marathon have nearly $500 million worth of Bitcoin in their balance sheet. HIVE, 72 million, 18.4% of capital. And CleanSpark, 82 million, 13.6% of capital. So again, you can't look at these ratios in isolation. You got to look at them as ratios. The ratios is so critical. This is also one of my most important ratios as well. The Miner Production ROI, where it takes the monthly production, multiplies it by the average cost of Bitcoin for the month, and divides it by the market cap for the month. And here, Mawson is the winner, 31.63%. And I don't know how they do that. Again, it must be very undervalued, or there must be something wrong as well. And I'll talk about exactly why that is at the very end too. Sphere 19.28, Core 13.15, Argo 9.25. But normally this should be around between 3 and 5% typically. But if you are at the bottom ranges, like HUT 0.57, HIVE 2.4, Marathon 2.3, that's just not good enough. That's not going to cut it in the future, in my opinion. And if you've got a combination of not being having a very high Miner Production ROI in combination with high debt, it's going to hurt. And then the IA upside ratio, this is based on price targets, not only mine, also discounted cash flow, also analyst estimates. You can see WULF here has technically the most upside, but you never know how the analysts come up with these targets. Mawson number 2, CleanSpark number 3 with 200%. By the way, I'll talk a bit about the other kiss of death too, and how that can impact prices, because some people will look back at the last bull cycle and they say, oh, whatever stock X, it hit $20 last time and now it's only at 4. It's going to go back to 20. No, because we'll talk about the kiss of death as well in a second. And here it is. This is the stock dilution kiss of death. And this is what has confused people. And I think, like in crypto, same thing happens in equities. Dilution happens. Or token inflation, whatever you want to call it, is exactly what goes down. Let me explain how this actually works in simple terms. So on the left, we have the pre-dilution scenario. So imagine there's a total of 10 shares. And you own 2 of these shares. They're the light blue circles. So technically you own 20% of the company. Now, then the company decides to issue some more shares to buy some more rigs. And on the post-dilution side, now there are 15 shares in total, but you still only own 2 shares. So your holding in the company goes from 20% to 13% just because of that little issuance. And I have a new model. Thank you to the team to help me build it. We can now automatically calculate stock dilution for any asset in real time, and it's very precise. So this is the share dilution for the last 12 months of all the miners. And I also threw in some other names there as well, just so you can have some perspective. Like Google and Apple actually bought back stock, so their shares actually went down. And if you look at the worst offender here on the list, in the last year, CleanSpark diluted by 130%. WULF, 110%, Marathon, 86.44%, RIOT, 42.49%. So this is crazy. Now, the interesting thing about this, it's like MicroStrategy. Oh, they should be on this list too, by the way. Let me check. I threw them in there. Yes, they diluted by 28.24% over the last year as well. Again, based on the model's calculation. If somebody issues stock, pulls in cash, imagine you're selling shares and you're buying Bitcoin at 27,000 immediately with the proceeds from those shares, and Bitcoin goes up, then it's fine. Or if you issue shares and you're immediately buying rigs and you're plugging them in within 3 months or 5 months or whatever it takes, that'll increase your hash rate. They'll be able to mint more. Then it's okay. If you're issuing shares for stock-based compensation or line the pockets of the wealthy executives, that's not good. Okay, so it's very important that you understand when the shares were issued and what they were used for, and that is critical. So now we have a situation as well going forward. This Marathon released this in their Form S3. And here they talk about, there's 2 things in this prospectus. One, they talk about an offering of up to $750 million worth of preferred stock, warrants, and units, and also a sales agreement prospectus that pertains to the offering of up to a maximum of $750 million of Marathon's common stock. All right. So remember our little picture with the little balls? That's happening to Marathon probably. Now, I personally think Marathon has never done well in my ratio calculations at all. It's never scored well. I never liked it. And actually, a funny thing about equities is you can say bad things about a stock and people won't come and attack you on Twitter. That's the difference between this and crypto, which is great. If you say something bad about somebody's bags and crypto, they'll go mad. But anyway, Marathon has never done well. Now they're issuing more stock when Bitcoin's already running. So if you issue stock to scale your hash or maybe repay your debt or whatever, it might be too late for that, I think. So we'll see what happens. Let's get into the conclusion real quick. And thank you for everybody for joining. And if you want to get smarter, subscribe to this channel. Appreciate you all. And remember as well, rule number 1, never hold more than 10% in a Bitcoin proxy. If you are investing in Bitcoin, make sure it's under 10%. In fact, if you look at, I do personally own CleanSpark, and I have a tiny bit of Bitfarms. My CleanSpark position is 20 times larger than my Bitfarms position. Okay. And my Tesla position is like 65 times larger than my CleanSpark position. So just to put things in perspective, miners are risky, but they can also be very lucrative. And we had some great buying opportunities, but we also had a lot of dilution. So you got to make sure you time your buys carefully. And I hope the weakness today is not driven in some of the names by some dilution we may not know behind the scenes. And therefore, it's important to look at things like this to be aware of what's going on as well. All right. And a couple of rules as well. My focus for miners is, as I say, it's a cutthroat business. And now I changed. I used to say $55,000. If the price after the Bitcoin halving of Bitcoin does not go to like $70,000, and very important, the hash rate remains the same, half of these miners could go out of business. Not saying they will, but they definitely will not be on a path to profitability. And the question is, how long can they burn cash? How strong is their balance sheet? And quickly, companies can get underwater real fast, as we saw with Core Scientific. They own nearly 3 times their market cap as debt, and that's just not manageable. Also, I do focus very heavily on capital and debt levels, capital ratios and debt levels, and my E-squared ratio, the Bitcoin ROI per month, is also very important. So I weight all the different factors based on whatever helps me get more risk averse. Now, this may alarm some of you too. This is like a back of the napkin math. If all things remain equal, the hash rate and Bitcoin price goes to 70K, but the reward gets halved, looking at the existing cost structures of these miners, literally, unless Bitcoin now gets to 70K, we may only see 4 survivors. Again, they could survive if the other ones start issuing a lot of stock, but if they do that, that dilutes you and it's not a good thing to hold. But you can see Core Scientific are in for a real drubbing here. But the ones that could survive are Cipher and Iris and this RIOT, and finally TeraWulf. Again, based on their cost structure. But remember, many of them are growing. They have rigs coming that they can plug in, beef up their hash. Some of them have incurred expenses to be in a position to do that. So again, the whole place is a very complex moving target. But this could happen if we fast forwarded to May 2024 and the Bitcoin price wasn't 70K. Many of these names could have less than a year runway left unless they fix things like pay back their debt, issue more stock, or get super effective and efficient. So let's look at some of the, we call it the Miner Heatmap. And the easy way to understand this is red is bad, green is good. And this is just a summary of some of the factors that go into the composite scores. And remember, if at all possible, you want everything to be green across the board. The more red blocks you have, the more you're going to get dinged. But sometimes the red blocks can be in areas that don't really matter. So for example, if they're scaling up their business and they got 0 HODL bag, they might get a red block. It might not matter. So therefore you add a composite weighting to that actual value. And remember, I'll say this again for the 3rd time, the place is a moving target. Every time the share price changes, every time the price of Bitcoin changes, every single one of these ratios changes, as well as their amount that they HODL, amount that they sell, the efficiency of their rigs, etc. It's their overhead, their electricity costs, all that type of stuff, all goes into this, and everything is changing all the time. So I look at 2 ways. One, I look at 20 different ratios and I create an average weighting of each. Okay, so 5% each allocation, and we get a score as follows. And you can see here, if you take an average of everything, again, usual way, CleanSpark is still on top, Bitfarms is number 2, DMGI is number 3, Cipher is number 4, and BTBT is number 5. You can see at the very bottom, Iris Energy doesn't do well. On an even scores, it's worst. Core Scientific second last, and Marathon third last. Sphere and WULF also not doing good. But remember, WULF has certain advantages, like being able to mine from nuclear power, which means they can actually be very efficient too, which means they could have a chance of surviving in the future. And they're also scaling up. Now, what I did was I take these same elements and I weight them based on what I deem to be most important. And the result is as follows. First place, again, still CleanSpark. Second place is Cipher. And Cipher have issues. No one asset is perfect. And RIOT also have issues, but they are just got picked at the post by a fraction of a percent into third place here as well. So I like to rely on numbers and data to make decisions, so that removes all emotion. So the winner, once again, is CleanSpark. And why did they win? Well, they were all-round lean machine. They are well run. They're very cost efficient. Their Bitcoin held is good. Their market cap over production is good. The production ROI is good. The EBITDA margin is good. The price to sales, price to book is good. Liability of market cap is good. And the production ROI is good. Okay? That's why they win. They're kind of like steady Eddie across the board. And that scores well in my ratios. Number 2 is Cipher Mining, which coincidentally we're second last month as well. And they do real well, except for market cap over hash and production ROI and price to book ratio. So they're not perfect, but they're pretty rock solid. And with a couple of tweaks to how they run their business, they could do very well. Also, third place is RIOT. Again, they do fall down in market cap over exahash badly, production over hash, and production ROI, and price to book. But the rest, they score really well. So the question is, would I buy RIOT? No. Do I own Cipher? No. I tend to have very high concentrations until things change. So for example, if CleanSpark goes to $10 and everything else stays equal, there will be other names that will be better than CleanSpark because I look at relative value basis. So I hope that's all very clear with everybody. And that's the story. So don't forget, subscribe to the channel if you like this. Oh, these numbers will give you a headache. Thank you all for coming. And let me know in the comments below what you like and which miner you believe has the most potential, because I do read all the comments. Some people think I don't, but I do. And thank you all for coming, and thank you to the mods in the chat too. And I'll see you all tomorrow. Bye-bye.